Hello and welcome to Money Control Stock Market Watch, a show that gives you the insights for really making the best returns for your investments in equity markets. Make your savings and investments work for you while you are at work. Invest smartly, and we'll tell you how. Now, last week for the equity markets, it was a good time because markets, both Sensex as well as Nifty, ended with gains. And also remember, the highlight was that mid-cap showed the highest weekly gains in the last 2 months. So what's in store this week? Let's get chatting with Vikas Khemani. Vikas, welcome to CNN News 18. My first question, mid-cap correction was a big worry for the investors in the last month or so. Now, in the last week, they have shown resilience and they have ended with gains of 3%. Do you think that the correction is over, or this intermittent high and low will continue and people should book profit?
Hi Nisha, good to be chatting with you. See, corrections are part of any market. In fact, a good healthy correction is always, desirable because if things keeps on going one way, it creates a bigger bubble. So I'm glad that we saw a
Yes.
healthy correction in the mid caps, especially last month, and that was primarily due to worries about what could happen on the liquidity front, and we had an event lined up where Fed's statement was expected.
Mm,
So I think I'm not very perturbed as far as I am concerned. I think I'm very convinced about sustainability of long-term India story. I think what we have seen in last
mm,
1 year is just a beginning. We are nowhere close to end of it. Once you start worrying about all those things when you're in a late cycle of a bull market, we are somewhere between early cycle to mid cycle, and I think it's here to sustain for a long period of time. So any correction, especially for investors
mm.
who are looking to create wealth from a long-term perspective. I mean, I am not giving this advice for traders and people who kind of speculate, but this is more from perspective of people who are looking to create wealth. Any correction, in my opinion, is a great opportunity to keep allocating towards equities.
That's right. So buying on dips is one strategy, but also what about the stocks which have given phenomenal returns over the years to the retail investors? Do you think that it's also time to churn the portfolio and park some profits if they're making enough gains? And is there any such sector in your mind?
Again, I would say same thing that if something has done very well for you, there has to be a reason behind that, right? I mean, as long as you are convinced about the fundamentals of the business, high quality business management team, I think you should continue to invest just because you should not never book profit for the sake of booking profit. I mean, either you should book it or sell it because you need some money, or you should sell it because you think that business fundamentals have changed. So short-term corrections are part of any game. So in my opinion, having an approach of that kind won't serve well. Remaining invested for a long period of time
All
serves
right.
very well. So I'm not worried about. I think in short term,
Hmm.
probably sectors which are related to which are
Hmm.
impacted to possibilities of third wave
Hmm.
could remain still a drag. But
Yeah.
otherwise, by and large, I think most sectors are seeing a broad-based recovery. Whether it is IT services, whether it is manufacturing, banking, financial services, real estate, which has been in laggard for a long period of time, or infrastructure for that matter. So we are seeing a
Yes.
very broad-based recovery across the spectrum, except some of the
Yes.
sectors like leisure, travel, which are impacted due to mobility related matters, which is
Hmm.
again I would say is temporary. And once the issue settles
Yes.
down over next 6 to 12 months, I think they will also come back with a big bang.
All right. Any stocks in particular, Vikas, which are on top of your radar for good investment?
From a sector perspective, I think IT services is one of the it's in one of the early stage of a long cycle of earnings growth. There's a huge demand which is coming from across the global markets, and IT services are right now in a very accelerated growth phase over next 3 to 5 years, and very high quality business, cash flow generative business. So we think they would do very well.
Yes.
Manufacturing related plays again are in a very solid state after COVID. I think manufacturing, I would say it's a kind of renaissance that manufacturing, which never got this kind of growth trajectory you will see over next 4 or 5 years,
Yeah.
led by import substitution, government's effort to promote local manufacturing, and diversification away from China. So those are the factors which are contributing to this growth, and it's a very, very sustainable cycle, probably close to where Y2K was for IT. That is what you will see manufacturing in like 5 to 10 years are doing very well. And other sector which has again just come out of long consolidation is banking and financial services. We had a credit cycle
Yes.
which was kind of in its
Yes.
bad shape for last 4 or 5 years. Now we are seeing most of the banks consolidated, provisioning done, growth picking up. So you will see again a 4 or 5 year period of accelerated growth for banking sector as well. And lastly, I would say real
All.
estate has been again in doldrums for 10 years, and finally there are implementation affordability ratios at its
Yes.
best in last 20 years. Sales picking up again will create serious amount
Yes.
of wealth for good quality developers in this sector. So I think net there is,
All
as I said,
right.
that there's a broad
So,
based recovery
yeah, so
happening.
infrastructure,
And
real estate, IT, financials, these are the sectors and themes you think will see sustained growth as the recovery happens for patient investors. Vikas Khemani, thanks so much for getting us so much insight on the market. Thanks so much for joining us. And with that, I hand it over to Ayushman. Ayushman, good morning.
Good morning, Nisha, and thank you for the latest stock tips. Now, with Money Control Pro's Financial Freedom offer, you can subscribe to Pro at 365 rupees per year and get exclusive offers worth 10,000 rupees. Log on to Money Control today. The offer is ending